Now we're going to switch themes to another topic that we heard introduced a little bit yesterday, and that is the opportunity that we see with fast and instant payment systems and interlinking. And so for this next panel on defining readiness and reciprocity for cross-border payments, we're really delighted to have Ahmed El-Hafneh, who is the Chief Business Officer for Buna, Shriyanka Hor, who is the Managing Director and Global Head of Industry Engagement at Swift. And to lead them through this session, we're delighted to have Brad Pregnell, who is Policy Lead for Emerging Payments Asia. So over to you, Brad.
Thank you very much, Conan, and that was a great session. So by way of introduction, my name is Brad Pregnell. I am Policy Lead and Ambassador with Emerging Payments Association Asia. We are a group that represents payments organizations in the Asia Pacific and have been very active in the cross-border payments discussions over the past couple of years. I'm pleased to welcome Ahmed El-Hafneh from Buna and Shriyanka Hor from Swift. Just by way of a quick introduction to the topic, Jessica mentioned earlier, and Conan and a few of the other speakers have mentioned the FSB's consultation on cross-border payments, particularly looking at border frameworks and bank-non-bank regulations. So that will be happening over the next couple of months. Submissions, I believe, are due in early September, and EPA Asia is quite keen to be an active participant and looking forward to making submissions on those consultations around cross-border payments. Another paper that was released a couple of weeks ago, I believe back on the early July, was the Nexus. So the Nexus announcements from the Bank for International Settlement in terms of the next phases of that. And Nexus has been one of the sort of more higher profile initiatives looking at this whole concept of interlinking. And by interlinking, what do we mean? So interlinkages of instant payment systems are a way of facilitating cross-border payments that allow us to achieve the objectives set by the G20 in terms of access, transparency, cost, and speed. An interlinkage sees domestic instant payment systems effectively connected, either bilaterally or multilaterally, in a way that allows those systems to be able to be sort of feeders into an interlinkage arrangement. So it is a way of sort of facilitating cross-border payments in a way that allows us to use these new initiatives around instant payment systems. There's now 70 plus instant payment systems operating globally in a variety of developed and developing markets, and really looking at ways in which we can leverage that as a way of facilitating better cross-border payments. So that's just by way of a brief introduction. So I might just start by asking questions of each of my panelists, and maybe they could briefly introduce themselves as well. I might start with Ahmed. Ahmed, what do you see as the challenges and opportunities presented by interlinkage of domestic IPSs to enable cross-border payments? And please introduce yourself and maybe a little bit of a description about Buna and what Buna does.
Sure. Thank you very much, Brad, actually, and thanks, Conan, everyone, for this kind of invitation, actually. My name is Ahmed El-Hafneh. I'm the Chief Business Services Officer at Buna. Buna is the regional payment system that's being assigned to promote the Arab economies and to connect to facilitate the cross-border payments among the region and even beyond the region. Buna has been launched in 2020, and we have over 120 participants from 15 countries, and we have thousands of transactions we settled usually. So, frankly speaking, okay, there are various challenges for the IPS to interlink the domestic IPS. These challenges, such as like cost challenge, we have speed challenge, we have the accessibility, transparency, and even availability challenge. When we connect domestic IPS networks from different countries with different time zones, with different availability, with different working days, the challenge could be an operational challenge, such as for example, the need to return payments, which such business case might not be appearing in the domestic transactions. In addition to the message standards, sometimes the challenge comes in the principle. The domestic payments are designed for domestic currency, only a single currency transaction by nature. So, for example, single currency settlement is completely different than having more than one currency in the transaction, or having the need to FX conversion. The settlement process also might face availability challenge due to differences in the time zone, because if you'd like to settle the transactions across different time zone and different countries, different regions, this might be a challenge. Once they start connecting to other cross-border, the domestic IPS system, okay, other cross-border payment system, these challenges start appearing. They appear in the FX rates, in the compliance screening, where domestic transaction they don't have a compliance. Maybe it's a pre-screened customers, complete KYC with a single currency and low risk due to the relatively low amount transactions. But most domestic IPS, they don't have compliance screening. So this is one of the major challenges that they might have. In addition to some new scenarios that they don't exist in the domestic payments. Like I said, this, for example, the return payment, or sometimes in the trade payment. The domestic payment also, the systems also, they may have difficulty in the funding and defunding the accounts, since they are not a financial institution. So these are the major challenges that are facing the interlinking between domestic IPS systems. If we talk about the opportunities, actually, some countries might have bilateral agreement, like UPI, Pay Now in India, linkage with Singapore, for example. UAE also start discussion with India for the same. Egypt and Jordan, they started a similar discussion, but at the end they prefer to go with interlinking through Buna. Okay. However, these initiatives are limited to specific corridors between two countries or within specific region. When these challenges appear, the role of a player, okay, like Buna or a Buna-like model will come to overcome these challenges. As I mentioned, we have more than 128 participants from 15 countries. We offer 6 currencies for settlement, 2 international currencies, Euro and US dollar, and 4 Arab currencies, Emirati dirham, Saudi riyal, Jordanian dinar, and Egyptian pound. And we're adding more currencies. Okay. We have a built-in compliance function, for example, and perform transaction screening, monitoring, and fraud detection. In addition, to enable the IPS system, okay, in collaboration with the banks, okay, we provided what we call leg in, leg out scheme, okay, to send and receive cross-border payments seamlessly by tackling these challenges through Buna business model. Multiple currencies, FX conversion, and compliance, which they will be tackled through interlinking and the interlinking banking. Okay, this is the interlinking banking by nature is a compliant with Buna standards as well as the IPS domestic standards. So by nature, it can bridge the gap between the domestic IPS and the other domestic system that connected to Buna. This makes it more practical, okay, using Buna and shorter time to market. Actually, we provide a message format to tackle such a challenge, okay, and to seize this opportunity. We provide a compliance check as well. So I would like also to refer here to one of our recent agreement with the State Bank of Pakistan, okay, which joined Buna recently as the FHI bank or fund holding institution, as a settlement bank, as well as a participant bank as well. Okay, this to connect Buna to RAST system, which is the payment system in Pakistan, the domestic payment system in Pakistan. The involvement, in this case, the involvement of the issuing central bank of the currency in this process, okay, it covers and overcome the regulatory part, which is one of the challenges also that might be appearing with different jurisdictions. Okay, so these are mainly the challenge that I can see from my perspective.
Great. Thank you very much, Ahmed. That was a very thorough and good response. And yeah, obviously Buna is doing quite a bit. And yes, I'm glad you mentioned the Buna Ross connectivity there. I did have the pleasure of working with the State Bank on Ross implementation a few years ago, and it's a very important corridor, obviously between those between the Gulf states and Pakistan. So. I might just go next to Shriyanka Ahore. So, Shriyanka, just briefly introduce yourself, and could you talk a little bit about how you see and how Swift sees the opportunities and challenges presented with interlinking domestic IPSs?
Super. Thank you, Brad, for the question, and to the IIF and EPA for welcoming us to speak on this very interesting and exciting topic. It's been close to my previous role where I was heading up the 253 plus market infrastructures who are, interconnected and operated by Swift. And in my new role, which focuses on industry engagement, again, this remains a key topic because we are focused on bringing an industry view and doing the right, putting the right effort and attention to public-private partnerships, G20 goals, focusing on interoperability, inclusion, and innovation. And I'm also Brad's colleague on the Payments Interoperability and Extension Group as part of the CPMI efforts to have a coordinated approach to the interlinking of fast payments. At Swift, I think, we believe that fragmentation is inevitable, right? As we go forward and look at cross-border payments, whether it's today or whether it's 10 years down the line, there's going to be a difference in the way cross-border payments has existed for the last 50 years on Swift, right? And we embrace that. First and foremost, because cross-border payments itself are changing, right? The purpose behind the payment, the initiator of the payment, the receiver of the payment, the actors in the chain, the risks, and the overall landscape of cross-border payments driven by geopolitics, geoeconomics, nearshoring, inshoring, as well as digitization of services, availability of online e-commerce, and a whole new segment of small and medium industries, fintechs going global. So there are all of these macro factors that change the nature of a cross-border payment, right? The direction of flow, the ticket size, but the good thing is cross-border payments are always growing and growing fast. Now, in that specific context, I think to make cross-border payments more accessible, correspondent banking plays a great role with the existing correspondent banking players, catering to the wholesale segment. And if you look at the G20 targets, it's evident that the speed is there, right? But there is also friction. So 99% of the transactions on Swift reach the end destination in 24 hours, 90% within the first hour. And yet, when you look at the credit out or the availability of the funds to the end beneficiary, there is a big discrepancy from a 56% to a 90%. So where is the gap? The gap specifically comes from last mile friction. And that last mile friction is introduced because of limited availability of RTGS operating hours. Flow, if you have a follow the sun payments, they have a different speed to settlement than those against the follow the sun approach. And then you have capital currency controls, regulatory procedures to be followed in the domestic markets, as well as batch processing limitations inside of banks. So if you culminate all of these existing friction and challenges, and you look at the interlinking of fast payments, what does it enable? It enables a 24/7 last mile. So having a last mile on a faster payment system versus an RTGS instantly contributes to the G20 targets, where the last mile, once it enters the receiving country and the payout happens, it has a 24/7 last mile on the incumbent correspondent banking model for wholesale transactions. But even when we look at lower value transactions which go on the network, we see the last mile extremely invaluable. And now coming to the interlinking, right? So when we speak of fragmentation is inevitable because of multiple things, right? One is, as I spoke, the geopolitical element of it, specific, ambitions around having a dedicated trade relation pipe, and those are motivated by different factors, such as, those driven by digitization agendas inside the country, partnerships with neighboring countries, global migration, and portability of identity systems, free movement across the borders, easier trade relationships, all of that, and of course data sharing frameworks, which is a big topic in the background. All of this foster bilaterals. But again, we know bilaterals, when you look at the number of bilaterals and the multiplicity of them, it becomes a non-sustainable model for many because of the simple cost of operation and um, yeah, continuous scalability. Now, while multilateral linkages and all of this has to be looked at, not just interlinking as a broad brushed stroke, but really in terms of the different models and what it brings. So if you look at the first element, which I spoke about, an opportunity to remove the last mile friction, this runs across, right? Specifically on the incumbent correspondent banking model. But then we also see one leg out schemes, which are basically nothing but cross-border payment systems, cross-border transactions being received by existing domestic payment systems. So it's most of the time one leg in, but also one leg out transactions, right? And that can be easily done by the existing availability of the faster payment systems who are existing, who are mature, who can scale to receive more and transport additional volumes on their systems, have the necessary level of resilience and screening, and they can simply go up and do the one leg out. So there's an opportunity there to reuse existing networks, existing payment systems, and open it up. And then you have bilaterals, which are very, driven by governments, and then you have multilaterals. Now, in multilaterals, there is a whole deal of complexity when you look at the governance challenges, and that's why all of this discussion, right? Like, how do you ensure that there is mutual respect in a multilateral system? SWIFT, for one, over the last 50 years, we've existed like a community infrastructure. Our scale to 11,500 institutions, 253 markets, 144 currencies, 40,000 currency distinct corridors has been enabled because we have a very distributed governance, right? We're overseen by the G10 countries, and we have, hundreds of national member groups who kind of come together and make this a community infrastructure. And that governance element is something that can be, taken on, and a newer protocol of governance, a newer framework for data sharing. All of these are possibilities, and I'm pretty excited about the potential of what interlinking has to offer overall to the financial industry. But last but not the least, I think that there's this focus on instant, which makes the whole game a very different game, right? So cross-border payments are normally planned. You have an estimated time when you need the money, and it can all be coordinated and done well when in a corporate environment, which are, it's not like somebody has made a click of a payment and is waiting for the credit to happen immediately, like card payments or e-commerce transactions. Although that is also a necessary, increasingly so, and that is the gap that interlinking of fast payment fills. But there is a difference, right? We're talking about different categories of users of a system. And when we talk about instant, we have technology to make faster payments possible, process it, all of that. But the ability to screen fraud in real time and to handle and curb cyber attacks as well as fraudsters penetrating into the system becomes all the more challenging. And I think that was pretty much what we heard about in the previous session. So we don't want to go into that. But over here, there is also a need for equality or reciprocity, which we will probably touch upon later in this session, in terms of how much do I trust the other leg or the other party in a multilateral system? How is trust, resilience, and privacy and my payment being protected. So there are all these mutual expectations that also rise in this kind of a new environment of payments. I'll stop there because this is a topic. I mean, Brad, you know, if you don't intervene and stop me, I can go on. So I will stop and hand it back to you for the next question.
It's all been very good. Thank you so much, Priyanka. That's awesome. There's a lot in there, which is great. Ahmed, I might just come back to you very quickly. Obviously, Buna has been operating for a number of years, and you do connect domestic. Effectively, you're connecting domestic operators. So, if we're looking at the connectivity happening between domestic IPSs, then what should be the expectation? What should that domestic IPS or what should domestic participants should be able to demonstrate before joining an interlinkage? So where should the standard be in terms of finding that balance between, I guess, competition, innovation, openness, access, but also managing the risk? So maybe if you can explain a little bit how Buna sort of finds that balance.
Yeah, actually, the main point is coming from the nature of the domestic IPS itself, like I mentioned, since they are dealing with a single currencies and single jurisdiction and all of this. So, in order for them to demonstrate that their readiness to connect to Buna or to any other cross-border platform, okay, and actually we are facing these during our interlinking projects. The first capability they should have is accepting the cross-border payment from the message format perspective, connectivity perspective, handle the use cases and the message titles. They need also, like Shanka mentioned, that they need to have a capability or at least to have to instant credit to the received payments, or at least near instant. Okay, but they should, I mean, demonstrate some kind of readiness regarding this point. Also, they should have the capabilities to send the IPS cross-border transaction. They should have the capability to support multiple currencies and the FX conversion. They also need to align with the jurisdiction with the interlinking systems. They need to identify the supported use case for the cross-border payment, right? For example, which one they're going to support: retail, corporate, remittance, wholesale, which business case that they are going to support. They need to be ready with a kind of dispute resolution mechanism or service. Some also readiness aspect that they need to ensure of, which is related to the compliance. From the compliance perspective, there should be readiness for or capability for the AML checks, including the sanction screening, monitor the transaction either prepayment or post-payment. They need also to be ready with the fraud detection, including checks and reporting. They can provide additional services. Of course, it depends from system to system, like proxy for the account details, like alias or lookup or like mobile number or whatever. Are they going to provide an account pre-validation for the beneficiary or not, such as the name, the status, the currency, okay, all of these attributes, okay? They also should adjust their transaction limit to support the cross-border payment. Sometimes for the domestic transaction, they allow only small limit or, I mean, few low amounts or low ticket value. They need to adjust this for the cross-border. So recently we have an example, okay, that was announced in Egypt, that the largest bank in Egypt, they got the approval from the regulatory to receive the cross-border payment and route it through the domestic IPS network. So this is the first step to get ready to get into an interlinking project. Okay, this is one of the initial steps to make the domestic IPS network ready to receive cross-border payment. Also, these systems need to find a solution for the settlement. They have a challenge with the settlement, such as, like, I mean, through either certain arrangement with central banks or with commercial banks, whatever. Okay, they need also to either to provide to be participant in a global system or to set an arrangement with some bank for the settlement, or to connect to Buna or Buna-like model. Okay, They need also, I mean, we have an example for this for the central bank settlement, like Pakistan, like the RAST project that we initiated with the State Bank of Pakistan, where the State Bank of Pakistan is acting as the settlement bank. This overcomes the need for the FX because they provide the local currency, the Pakistani rupee, without the need of the FX. Okay. This is also similar to the Arab currency settlement in Buna model, where the central bank acts as the settlement bank, okay, for the Arab currencies. Or they might have other arrangement through a commercial bank, for example, where FX conversion might be required, like the example of Egypt that I mentioned, where the largest bank of Egypt will act as the settlement bank for the banks within the IPS domestic network, and they will do. I mean, this bank will do the will play as an interlinking bank and will do the FX conversion. It all starts by the regulatory. Once you secure the approval from the regulatory, transaction limit adjustment settlement arrangement could be coming at the early and at the later stage. Okay, but this is the first step. But also this is a must to do. Like, they need to adjust their transaction limit. They need to have a settlement arrangement. They need to have an arrangement for the FX conversion and the compliance, okay, including the sanction screening and monitoring of the transaction and fraud detection. This also should have the ability to instantly credit the beneficiary or real instant. Okay, this is considered as a challenge by itself because sometimes the interlinking bank, they wanted to perform their own compliance screening or sanction screening. Okay, despite that, for in Bona example, for example, we have also a built-in compliance. Okay, and this might take this might introduce some difficulty to make it instant.
That's great. Thank you, Ahmed. That's wonderful. And I agree with you. I think limits, settlement, FX, AML, CTF, fraud, instant crediting. Yeah, all very, very sort of real examples that and real challenges that domestic systems and their participants need to deal with. Shriyanka, I might go back to you, and I might actually sort of combine sort of my final two questions. So if you could talk a little bit about readiness, and I think Ahmed's given a very good example on how Buna sees readiness in terms of domestic IPSs and their participants, but also he touched upon the issue of reciprocity, about that ability, about acceptance of that. So maybe if you can talk a little bit about both how should domestic IPSs be able to demonstrate readiness, but also talk a little bit about what should be the expectation around reciprocity. So maybe if you can, sort of explore that issue a little bit.
Sure. Thanks, Brad, for the question. I think great insights from Amit. But when you look at, I'm going to give a very swift view of domestic market infrastructures, specifically on the interoperability angle. Because we believe that every domestic faster payments has a character of its own, was created for domestic needs, and there should be that level of differentiation because it really is for a markets and the way, and it's cultural, it's a reflection of the culture, the price sensitivity, digital adoption, all of those things roll into one a domestic faster payments of a country. Having said that, there is also a degree of trust, when you have a certain faster payments and its adherence to global international standards such as acceptance of ISO 20022, universal identifiers that can be carried through the journey of the payment, like the UETR, the legal entity identifier, and other universal identifiers. But most importantly, the ability to interoperate through messaging standards, having a harmonized adoption of information flows, and most of it is based on ISO 20022 as an open standard. There is CBPR plus on the cross-border angle. High value payments plus is on a agreed market practice such as HVPS plus, which kind of correlates and dovetails into CGMP on the corporate side and CBPR plus. There also exists IP plus as a market practice, which the domestic markets can adopt. And it dovetails into HVPS plus and CBPR plus. So that harmonization is super important. But again, when we talk about standardization and harmonization, it's not just limited to data and information. There is also the ability to standardize happy, unhappy paths, in terms of the transaction flows, in terms of processes and sub-processes like exception management, dispute resolution, and so on. And we speak about it a lot, but I think that degree of trust in these processes is super important for market participants on either side, who are actually the key elements to the success of interlinking arrangements, because they provide not just the FX, they bear the FX risk, right? And they also bring the liquidity in that interlinking arrangement. So apart from just the data part, there is also overlays. And when we talk about overlays, the QR code interoperability, the ability to pre-validate a transaction by latching onto domestic proxy addressing or confirmation of payee schemes, and the ability to share data in a safe environment, whether it is to have AI, predict fraud, or whether it is for us to have visibility on the availability and the correctness of the other beneficiary account. All of this requires a degree of standardization and continuous harmonization, which means the adoption of standards in a synchronized fashion and the evolution of market practices at a certain synchronized manner. And alongside this is the whole process, governance, and change management piece, which I spoke about, and that is the ability for entering into an arrangement, okay, and an agreement that will allow for reciprocity and sustained reciprocity that will become the foundation and the bedrock for these arrangements to succeed. And only when all of these pieces come together with the existing cross-border models will we see a whole new re-architected financial industry of the future, right? So I leave it there, Brad, and back to you.
Great. Thank you very much, Shriyanka. Ahmed, just quickly, we've only got a few minutes. Can I just get maybe a final thought? Maybe you wanted to mention reciprocity, but any sort of final thoughts on this issue before we wrap up?
Actually, the main point in reciprocity, we have two kind of reciprocity: the technical one and the business reciprocity. While technical reciprocity is related to for example, message format and so, but business reciprocity is the ability to send transaction from both sides. Technical reciprocity might be, feasible to achieve it 100%. Business reciprocity might have another challenge, for example, for the net receiving countries such as Egypt and India, and might be either achieved partially or not achieved at all. So this could be one of the challenges also in the reciprocity, mainly the business reciprocity.
Great. Excellent. Thank you very much.
Thank you.
I think we're going to wrap. Shriyanka, do you have any final thoughts before we wrap up the session?
No, I think as and on behalf of SWIFT, I think we welcome more efforts to streamline and make cross-border payments instant, frictionless, fast, and we stand, having built all those little foundation blocks that ensure interoperability. We welcome and embrace these models, because today we're talking about fast payments, but it is really about bringing the incumbents who are on correspondent banking along with us because of the FX and liquidity aspect I spoke about, but also to an era where we're going to see alternative models of settlement, alternative, tokens tokens and CBDCs coexist along with the settlement of commercial and correspondent banking as fiat. And finally, there will be alternate networks, and SWIFT will always be there to interoperate and make the future come together of cross-border payments, not limited to payments, but FX, trade, and securities as well.
Wonderful. Thank you so much. That's it for our session on reciprocity and readiness and cross-border payments. I'd like to thank the panelists, Ahmed El Hefnawi, who's the Chief Business Services Officer from Buna, and Shriyanka Hore, who's Managing Director, Global Head of Industry Engagement at SWIFT. So thank you very much for the session. I thought it was fabulous. A lot of great content, a lot of good discussion.